Okay, so let's have a look at step number 6, just for loans and investments. So that means that there must be a loan and investment in the question itself. So if we look down on here, we see that Murphy borrowed 120,000 on the 1st of 9, 2014, part of which was used to purchase an adjoining showroom costing 90,000. So remember, we need to add that on to our premises up here at the top in the balance sheet. The remainder of the loan was used to purchase furniture. So we have to do the same then with the furniture, because it's increasing. So it's 30,000 or 30,000 of extra furniture that we bought. So we need to increase our furniture by the same amount if we have any up here. If not, we have to include it in our balance sheet. It was agreed that Murphy would pay interest on the last day of the month at a rate of 5%. So that's how much interest we have to pay back each month. The capital sum was repaid in a lump sum in the year 2022. And to provide for this, the bank was to transfer 1,250 on the last day of each month from Murphy's business bank account. Remember, we did an adjustment on that already as part of our bank payments. Into an investment fund commencing on the 30th of 9th, 2014. So the first thing we have to do is the loan. So we have a loan of 120,000. So 120,000 should be 120. So you're going to multiply that by 5%, because it tells in the question it's 5%, and then you're going to multiply that by 4/12. Why 4/12? Because we got it on the 9th, so you only have to pay for 4 months. So you've got September, October, November, and December. So the amount of interest that we have to pay for these 4 months is 2,000. Now, if we read on, it usually gives you some kind of adjustments of furniture, but in this one here, it gives us insurable interest. So that 2,000, 20% of that is for drawings. So you have to find out how much of it is going to go into our drawings and how much is going to go into our expenses. So you're going to take the 20,000 and you're going to multiply by 0.2, or sorry, the 2,000 multiplied by 0.2, and you get 400. And so your interest payable needs to be reduced by 400. That 400 will go into your drawings, and the 1,600 will go into your expenses in your profit and loss account. We also notice up here in the bank payments, we've got interest of 1,500. Now, these are two things that you need to look out for in the question. So look out for your interest and look out for anything in drawings. So the total amount is 2,000. We've paid 1,500. So we have 500 left to pay, and that goes into your balance sheet as a current liability. The next thing we have to do is look at our investments. So it tells us that each month we're going to pay 1,250 into an investment fund. So that's going to multiply that by 4 months. So by the end of that, we're going to have 5,000. Now, just down here at the end, we're going to earn interest. And that interest that we're going to earn is going to be €30. So you have to add that €30 onto the 5,000, and that's going to give us €5,030. And that goes into your balance sheet as part of your, and the €30 go in as part of your additional income in your profit and loss account. The next step after that, step number 7, is to adjust for any other expenses or gains. So we should have some expenses or gains. These will usually be up here to start the question or down here at the end of the question. Now, in this one here, the expenses or gains are usually this part of here where it's kind of dividing up between the drawings and the expense itself. So the first one that we have this is insurance. So because at the start it says that we've got premises insurance prepaid 120 or 1,200, it should give us some information then about premises during the year. And our bank payments, we've also got our annual premise insurance of 3,800. And then down at the end then, it hasn't given us anything at the end for this question. Okay, so it says that we have 3 months premises insurance prepaid, so that 120 has been prepaid from the previous period. And then it gives us an annual insurance of 3,800. So you need 9 months of this 3,800. So you're going to take the 3,800, multiply that by 9/12, and that's going to give you 2,850. So we've prepaid for the next month 9,500. So that's going to go into your current liabilities. So in here you're going to have 3,800 plus 1,200, because that's the amount that we've actually paid. So we paid 3 months from the previous period. We paid 12 months for this period. So it gives us 5,000 less the prepaid amount of 9,500. That's the 3 months that we've left over. And that's going to give us the expense for this period of 4,050. And that goes into your profit and loss account. We also have general expenses in this one. So usually with general expenses, we're going to put them together with your wages. So our general expenses are your cash payments of 45,800. And then your wages due, which we should have paid, is going to be 1,800. So you're going to take it away, because that should be paid during this year. So it's going to give your general expenses of 44,000. That goes into your profit and loss account as your expense. Another in this question at the start up here, we've got light and heat. So we have light and heat was 20%. So 20% of light and heat should be attributed to private section of the business. So the amount of light and heat we have is 6,800. That comes from the bank payments that we paid. We have due here at the end. So always in this question, look at the start and look at the end of the question to see if there's anything due or prepaid or due or prepaid down here. We looked at the start already, there wasn't anything, but down here we've got electricity due of 380. So that's going to be due at the end. So the total expense is going to be 7,180. Now remember, this is light and heat, so always look out for light as well. Electricity due, you also have kind of oil or that sort of thing could be included as well at the start or the end, which will need to be adjusted here. So your drawings then is going to be 25%. So you're going to take the 7,180 multiplied by 25%, and you get 1,795. That figure goes into your drawings. You're going to reduce your total expense, so take it away. You're going to get 5,385, and that'll go into your expense. Furniture then, 25% of furniture. So we bought furniture up here. Remember up here we got a loan of 120, 90,000 was of it to buy a showroom. The remainder was for furniture. So it's going to be 30,000. So you can take 30,000, multiply by 25%, and you're going to get 7,500 for your drawings. And the remainder then goes into your balance sheet as part of your fixed assets. That's all the adjustments for gains and expenses here. And then just for yourself, your last step. Just there's a lot of drawings in this question. So just do one up for yourself for the drawings, just so you get one full figure for the drawings figure. So we had a part of your cash working 3. We had purchases, we had interest, light and heat, and drawings. All of them are kind of taken from the different workings we had, but also from this working here as well. Okay, so now let's have a look at the profit and loss account for Ian Murphy for the year. So remember putting your title into Cody Marks Comfort. First item is always going to be sales. So we know that we calculate our total sales, step number 4, at 290,840. So that goes straight in. That's cost of sales. Your opening stock is 17,000. It's taken straight from the figures we're given at the start. So you've got stock of 17,000. Add your purchases. So we know that we've step number 5 to calculate your total purchases, which is 133,200. So you're going to add those two together. That's your closing stock. Now remember, we did a little adjustment on that as part of our sales because of these goods in transits. That adjustment mightn't always be there. It just come up in this question here. I just put it in here. It doesn't matter where you put it, as long as you have it in to get your closing stock, which is 11,200. So you're going to take that away to give your cost of goods available for resale or cost of goods available for sale. Take that away from your sales, and you're going to get your gross profit of 151,840. Less your expenses then. So the majority of these are going to be taken from step number 7. So you got insurance, 4,050. Got the next one then, down along with your general expenses, which is 44,000. Then you got your light and heat, which is 5,385. And then don't forget your charity. So we paid charity here, it's an expense. So you need to include it here. Standing order for chartered organisation, 3,000. So that needs to be included here as part of expenses. Look out for that. It's one that students fall down by not including it. So I'm going to add those four up together. You're going to take that away from your gross profit, your expenses, take away from your gross profit. You'll get a net profit then of 95,450. From that, then we need to take away our interest. So we did a working on our interest, which was part of our loans and investments. So up here, the interest then of expense 1,600. So go straight in, reduce it down, which gives us 93,850. And don't forget to put in your ad income, investment income of €30 that we get when we put away this 1,250. Tells in the question, we get €30. And you want to add that on. So that gives us then our total figure from our profit and loss of profit of 93,835.